Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up on this very, very lovely day. Let's talk about this. What's going on here? Stocks finished in the red today across the board. Nothing major. Seriously, I know everyone's going nuts over it. Not even 1%. To me, again, like I said in the video from this morning, this is a godsend. This market needed to burn a little bit off. Understand, as incredibly, ridiculously freaking out of control things are right now with regard to the market, valuations, guidance, what they're doing in the bond market, household debt hitting record highs. Copper today settled at a one-year low. I mean, copper. Think about what that means. You and I, they're fist feeding us. I mean, like off the Richter scale, that we're in a global recovery and it's like the best we've ever seen. But copper, which is like used in everything, pretty much, hits a one-year low. You could just laugh or cry or do whatever you want. But here's the situation. Situation is very simple, is very straightforward. Again, and it's the same thing I've been saying. There's nowhere to go. You cannot be in anything. All right, let's talk about the dollar real quick. The dollar put on a pretty staggering gain today, which put a huge amount of pressure on metals today. Silver got slaughtered. Gold got hit as well. But here's what's going to happen. Here is what will happen. The dollar is going to weaken here. Period. There's just no way that the dollar will be allowed to maintain its upward trajectory. It just won't happen here. The Federal Reserve, you know what all they've been talking about, although everything is going in the complete opposite direction of everything they've been saying, is determined to create inflation at all costs, which means they will dilute it, which means, and this is the only thing here that, and I was thinking about this earlier today, the Fed is really in a bad spot here for several reasons. They've kind of almost maxed out their ability, seriously, think about it, to keep interest rates suppressed in such a way that it's not creating alarm. All right. Now we understand the yield curve is screaming at us like the volume gets louder every single day. Your yield curve is flattening out. We're in and out of single digits all day with regard to the 10-30 spread. That's the only spread that this guy is concerned about or will talk about. And I covered this at length in the video from this morning. Now, what the Fed has been doing here, printing cash out of thin air, adding it to a digital screen, buying bonds, keeping the dollar weak now. The problem is that the more aggressive that the Federal Reserve gets in keeping the dollar weak, which is what they want to do, what President Trump wants, the bigger the issue with the inversion which is going to happen with regard to the long end of the curve. The market will get spooked at that point. So the Fed right now, in my opinion, is walking a tightrope. And we'll see how they manage to rig this. Now, they've been pretty crafty. I mean, a lot more crafty than I would ever imagine that they could with their dealings here, both with public and non-public information or available information with regard to just keeping this entire thing propped up in fantasy land. So I'm not sure what they're going to do, but I can promise you, once again, that with the midterms here just around the corner, they're going to keep propping this up, or at least they're going to attempt to prop this up. And it's just so simple. Being that there is nowhere else to go, if they can keep the dollar weak, if they can keep that 10-year yield in the sweet spot, which it is in right now, and if they can keep the yield curve the long end of the curve, the 1030 spread, the only one I'm concerned about, from inverting prior to the election, then the market is going to continue higher. That's it. I mean, today I sat back and I had the time of my life. I'm sitting here, I'm watching this market sell off, I'm listening to CNBC and Bloomberg and talking heads and all this nonsense going on, and I'm just sitting there going, oh, you just wait. You know, I'm just waiting for the right time to strike, and I will be striking, and I'm going to strike so hard, it's not even going to be funny. So, look, I really hope all of you are taking advantage of this. Again, it's the gift that keeps on giving. Use the tools on my freaking website. They're not for me, they're for you, and they're all free. So, utilize that resource there, and make this work for you. Anyway, let's see how this plays out tomorrow, the next day. I don't know. For all I know, the market could sell off further tomorrow. And what will I do? I'll sit back and smile all freaking day, and I'll watch it, and I will wait. If they decide here to somehow, again, if you watched the bond market action today, they were very cautious. You didn't see any major off the Richter scale buying, because that would have flattened out the curve further. They're in a little bit of a spot here. I believe, and I've said this, that when the 1030 spread gets 10 or into the single digits, that the mainstream is going to have to start talking about it. They don't want to talk about it. As a matter of fact, they're doing everything in their power to not talk about the 1030 spread. They want you to look at the 210 spread. Think there's a reason for that? Just freaking maybe. All right, with that said, my lovely friends, I will see you in the morning, and it's going to be great.